Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight, as widely expected, the US Federal Reserve hiked rates by 25 basis points and left the meeting a little bit mixed as the question and answers after the announcement. Fed Chairman has gone with the assessment that wait and see, that meaning that we will have to go from month to month on data. So therefore it hasn't totally cancelled out any further rate hikes. But the dollar index was a little bit weaker, as we can now see the Australian dollar rebounding after the mixed price action yesterday from the CPI number. From the rebound, now looks back towards the region of 68.40 area. I feel that the mixed technicals and the flat MACD may see another downturn. Although the gains have been quite impressive, they always seem to end up somewhat negative, and that's what's given the technicals somewhat a weaker play here. Overall, though, the market is locked in a 66.90, where the 60-day moving average is, and up towards 69 cents. I don't feel beyond there or beneath there we will see any difference over the next month or two. With the dollar weakening, we can see that the euro still respects that bottom side of the range around 109.80 to 110. But with all eyes now on the ECB rate decision with a base of 25 hike, could see a little bit more strength coming into play here. But towards 111.60, resistance is likely to kick in and find bears take the ambush and maybe even see it drop back towards the bottom side of the range here, which I mentioned is around 109.80. Dollar yen, well, the profit taking is coming back rather quickly as the market sells off into the fourth consecutive day after recently posting a very strong bullish rebound from 137. Having reached its objective around 142, the market is pulling back. And towards 139.5, I feel this is where we got the confirmation to the bullish case and maybe again see the bulls return, as history tends to repeat itself. And if so, we could see a rebound back to 142 or maybe on towards 143 and then reassess. With the Bank of England rate decision coming up fast at the beginning of August, the market is still somewhat holding to this uptrend, which comes in around 127 now. And looking towards the current gains, could see a rise up towards the region of 130. I feel that the Bank of England may actually hike rates by 50. That would give a strong rally for the sterling, as the high inflation still exists and therefore not as tackling it as well as the US is. And I think the Bank of England needs to sort of pick up its pace and therefore could put a bit more boost in the pound. Gold has also found a bit of recovery here after the recent outside range day that supported it down towards 1,915 to 35. A little bit short of its target there, we see at 1,940, but the bounce has now put the market back on focus where we saw the rejection, which was around 1,988. If so, the pattern should be repeated and eventually see the market downturn towards that 1,900 area. I'm not a bull here. I feel the market is slightly somewhat toppy, as we can see previously back in May this year and also in June, where the good supply is still lurking and maybe see a repeat of this current pattern. Wrapping up with oil, the market still maintains its gains. It's reaching $78 a barrel, and with bearish divergence, the risk is if it doesn't kick in, then we may see a rally on to $81 and negate the downside call back to around 76.5. So therefore, keep an eye on this pattern. It's still trending, but a little bit overheated. But maybe the market may still see any pullback or dips as a potential buy, and still expect to see the bullish outcome onto $81. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the interest rate report. I hope you enjoy the rest of the day.